So in terms of the roles of finance and accounting, finance is the part of business where you raise funds for operations, like to expand your business. And of course, you know there's two ways to raise funds. What are they? The first way is through equity financing. That's where you sell shares or you can sell stock on the open market, where people become owners of the company. So that's one way to raise money. And then the other way to raise money is through borrowing money. You can borrow it through a bank, or you can sell bonds where the bondholders are lending you money, but then you have a legal obligation to pay the bondholders back. So it puts you under a great deal of financial pressure because you have to pay back bondholders, whereas so debt financing where you have to pay back the bank or pay back bondholders puts you under a great deal of pressure, whereas equity financing, you don't have to pay back the owners. So later we'll talk about Enron, and in Enron's case, they primarily used debt financing, which put the company under huge amount of debt and eventually caused their collapse. And of course, accounting is the recording of transactions in a company. But the broader role of finance and accounting, the top item there is to achieve the company's goals, and also to have strategic vision for the company. But in ethics, we want to build values. See, values is so important in ethics, ethical values. And so the way we do finance and accounting should reflect the values of the company. And we're talking a lot about Enron. You will have a quiz on Enron. And so we're talking a lot about Enron because Enron is always the case which we use to talk about unethical finance and accounting. And so what they did was they hid away their debt, and we'll talk a bit about that in a moment. But for now, just remember Enron was here the 7th largest U.S. corporation. They were bigger than IBM and bigger than Sony at the time. And in a matter of a month, they went completely bankrupt due to this scandal. And 30,000 people lost their jobs. Huge amounts of money were just totally evaporated. And Enron succeeded in fooling investors into thinking it was highly profitable when it was actually heavily in debt, because again, they used debt financing and just on the verge of collapse. So they hid away that debt. And also they recorded revenues when the deal was signed, not when it was earned. So that's what you call really aggressive accounting, right? You know that you're not supposed to record revenues until a service is provided or a product is sold, but they recorded revenues right at the very beginning, even before any revenue was earned. Okay, so they called it mark-to-market accounting. It was really, really aggressive accounting. And Chief Financial Officer Andy Fastow had a lot to do with this because he was, you might say, the financial engineer in all this. So accounting's purpose is to provide a window for the organization, investors to see the organization. But Enron, on the other hand, made sure the windows were as cloudy as possible. In fact, they called Enron a black box. So a building without any windows, because nobody knew what was going on inside Enron. And ultimately, Andy Fastow, the CFO, was arrested for his role. Now, what Fastow did was he created these mini companies. You'll learn more about that in the video that is part of the assignment. And he hid away these debts into little companies called LJM and other fancy name companies. And he could keep the debt off Enron's balance sheet. So Enron appeared to be almost debt-free when it was actually hidden in these special purpose entities. And he would skim some money off each transaction because he was created these special purpose entities, and he would move cash between Enron and these SPEs, and in the process he could skim some money for himself, and he made a lot of money for himself. And he said after he got out of jail, he said in a speech, he said, well, I'm in my mid-50s, So business schools didn't have comprehensive courses on ethics when I did my MBA. The word stakeholder wasn't even used. When I was in business school, there was only one word: shareholder. And so, as I said, Fasto and myself, we're in that same generation. And I told you when I went to business school, we didn't have any courses on ethics, and there was no such word as stakeholder. We only talked about the shareholder, making money for the shareholder. And that's what Fasto was thinking about. And he says, I thought what I was doing was good for shareholders and even employees. And so I thought I was doing my fiduciary duty. And because of what he did, he went to jail. And here is his jail card here. And I was watching a speech of Fastow to some business leaders, and he's going around giving speeches these days after he got out of jail. And he holds up an award in one hand. So in his right hand, he's got this award. And on the other hand, he's got his prison card. And he says, here is an award for being CFO of the year. So he was recognized as a great CFO and all this creative financing. And so they called him the CFO of the year. And he says, on my other hand, here is my prison card. I went to jail because of what I did. And he says, the funny thing is, I got both of these things for doing the same thing. So what he meant by that was, he was doing all this creative financial engineering, and in the process, people praised him for being creative, but at the same time, he was misleading investors and misleading the public. He actually thought he was following all the rules. In fact, he did, but he followed them in a way which misled the public. And so he said, it's dangerous to ignore the principles, which is the spirit behind the rules, because it's possible to follow all the rules and still commit fraud and be misleading. So when we talk about deontology, remember deontology is following the rules. And so deontology means not just following the rules or the letter of the rule, but also the principle, the spirit of the rules, the intention of the rules. So you have to follow the entire letter and spirit of the rules in order to follow deontology. And Andy Fastow, he didn't do that. He basically followed the letter of the rule and still went around it to be misleading. And because of Enron, there was a lot of turmoil in the accounting industry. Accountants lost their trust among the public. It took them a long time to rebuild that trust to what it is today. And again, this was back in 2000, around the year 2000. So it took them a long time to rebuild this trust. And so it's important now that we have trust in the accounting profession. And today we emphasize how important that the public is a key stakeholder for accountants. Because again, for any professional and accountants, it's important for people to trust the professional, right? In the first lecture, I said, why is it so important for you to follow professional rules if you're going to be a professional? Because it's important for professionals to be trusted because they offer an important service to the public. If people stop trusting professionals and stop trusting accountants, the stock market would collapse. So I close with a little story about a manager who wanted to hire a professional. And the first professional he interviewed was an engineer. And the manager says, I've just got one question. How much is 2 plus 2? And the engineer gets out his computer and does all these engineering calculations. And he says, well, 2 plus 2 is 4. And the manager says, okay, thank you very much. You can leave now. He calls in the second professional, the lawyer. And the manager says, I've just got one question for you. How much is 2 plus 2? And the lawyer takes out his case books and he says, according to all the case law, the answer is 4. And the manager says, okay, that's fine. You can go now. And finally, he calls in the last professional, the accountant. And the manager says, well, I have just one question for you. How much is 2 plus 2? And the accountant bends over and he whispers in the manager's ear, how much do you want it to be? You get it? That's the kind of accountant Andy Fastow was. When they hired him, Ken Lay and Jeff Skilling said, "We want you to make Enron to be very profitable. I don't care how you do it, just do it." And he says, "Well, that's okay, I'll do it. How much do you want it to be?" So, those of you who are going to be accountants, don't be like Andy Fastow. Okay? Take care.